Do you know where your money should go to grow in 2025? With so many options and opinions out there, starting your investment journey can feel overwhelming. But here's the truth. You don't need to be rich or a financial expert to begin. In this video, I'm breaking down 10 simple and actionable steps that will show you exactly where to put your money in 2025 if you're starting with just $50. I've helped countless people overcome their fear of investing and start building wealth. By the end of this video, you'll have the clarity and confidence to take your first steps toward financial success. Starting your investment journey can feel like stepping into a maze. There's a flood of information online, advice that often contradicts itself, and the fear of losing money looming over every decision. Maybe you've thought about investing but felt paralyzed by questions like, where do I even begin? Or what if I make a mistake? These are common concerns that hold many people back from taking action. One of the biggest myths about investing is that you need to have a lot of money to get started. This misconception keeps people stuck in the mindset of, I'll invest later. But the reality is, every day you wait is a missed opportunity to let your money grow through the power of compound interest. Here's another challenge. Many beginners dive in without clear goals or a strategy. They might follow trends or invest impulsively, only to feel frustrated when they don't see immediate results. But here's the good news. Investing doesn't have to be complicated. With a clear plan and the right tools, you can take small steps that lead to big changes over time. Let's simplify the process together and make investing in 2025 a realistic goal for you. Now that we've identified the challenges, let's focus on the solutions. In this video, I'll share 10 actionable steps to help you start investing with confidence in 2025. These steps are designed to simplify the process and ensure you're making informed decisions. Let's start with the first step. Why now is the perfect time to begin investing? The first and most important question is, why should you start investing now? The answer lies in the power of compound interest. Your money earns returns, and those returns earn even more returns. The earlier you start, the more time your investments have to grow exponentially. For example, investing $100 a month starting at age 25 can grow to over $150,000 by retirement, assuming a modest return. Start at 35, and that total drops significantly. 2025 is a unique opportunity because technology and access to investing have never been easier, with platforms offering fractional shares and low entry points. Even beginners can invest small amounts and watch their money grow. But here's the reality. Waiting means missing out. Every day that passes is time your money could have been compounding. Commit to starting today. It doesn't matter how small the amount is. What matters is building the habit of investing consistently. Next, let's explore the different types of investments available to beginners so you can see what aligns with your goals. The second step to smart investing is understanding the different types of investments available to you. Each has its own risk level, purpose, and potential for growth. Stocks. When you buy a stock, you're essentially buying a small piece of a company. Stocks offer higher returns over the long term, but come with more volatility. Think of them as your growth engine. Bonds. Bonds are like lending money to a company or government. In return, you receive steady interest payments. They're less risky than stocks, but usually provide lower returns, making them ideal for stability. Exchange-traded funds, ETFs. ETFs combine multiple stocks or bonds into one investment, offering diversification at a low cost. Real estate. While requiring more capital, real estate can provide passive income through rental properties or appreciation. Each of these options serves a purpose in a diversified portfolio. Choose one type of investment to research further. Start with ETFs if you're looking for simplicity and diversification. Now that you know the options, let's talk about setting financial goals to align your investments with your life plans. Before you start investing, it's crucial to define your financial goals. Why? Because your goals will determine the types of investments you choose and how much risk you're willing to take. Ask yourself, what do I want to achieve? Are you saving for a house, building a retirement fund, or planning a dream vacation? When do I need the money? Short-term goals, 1 to 5 years, require safer investments, like bonds or high-yield savings accounts. Long-term goals, 10+ years, allow for higher-risk options, like stocks or ETFs, since you have time to ride out market fluctuations. For example, if your goal is to save for a down payment in 3 years, you might focus on low-risk investments. If you're building a retirement fund, stocks or index funds with higher returns over decades make sense. Write down one financial goal, along with its timeline and purpose. This clarity will help you choose investments that align with your needs. Now that your goals are clear, let's see how you can start investing even with a small budget. One of the biggest myths about investing is that you need a lot of money to start. The truth: you can begin with as little as $50. Thanks to modern platforms and tools, investing has never been more accessible. Apps like Robinhood, Acorns, and Webull allow you to buy fractional shares, meaning you can invest in companies like Apple or Amazon without needing thousands of dollars up front. Another beginner-friendly option is exchange-traded funds. With ETFs, you can invest in a diversified portfolio of stocks or bonds, reducing risk while keeping costs low. Many platforms let you start with small amounts and build over time. The key is to start small, but consistently. Over months and years, these small contributions add up, and thanks to compound interest, your money begins to grow exponentially. Open an account on a beginner-friendly platform today. Set up an automatic deposit of $50 a month to get started. Next, we'll explore why diversification is crucial to protect and grow your investments. Diversification is one of the most important principles in investing. Simply put, it means not putting all your eggs in one basket. By spreading your investments across different assets, industries, and markets, you reduce your risk. Here's why it works. If one investment underperforms, the others in your portfolio can balance it out. For example, while technology stocks might experience volatility, bonds or real estate investments can provide stability. Diversification doesn't have to be complicated. A simple way to achieve it is by investing in ETFs or mutual funds, which combine multiple assets into a single investment. Another approach is dividing your money between stocks, bonds, and cash reserves, depending on your risk tolerance. The goal is balance. You want growth potential from higher risk investments while maintaining safety through low risk options. Review your current investments, or, if you're just starting, consider an ETF that provides broad market exposure. Now that you understand diversification, let's dive into a growing trend for 2025: green and sustainable investing. Green and sustainable investing is more than just a trend, it's the future of responsible investing. In 2025, companies that prioritize sustainability, ethical practices, and environmental impact are not only making a difference, but also delivering strong returns for investors. Sustainable investing focuses on environmental, social, and governance (ESG) factors. This means putting your money into companies that are reducing their carbon footprint, supporting diversity, or adhering to high ethical standards. Why does this matter? Research shows that ESG-focused companies are better positioned for long-term success. As they're adapting to global challenges and consumer demands, investing in these businesses aligns your financial goals with your values. There are plenty of accessible ways to get started, such as ESG-focused ETFs or funds. These provide a diversified portfolio of companies that meet sustainability criteria. Look into one ESG fund or ETF and consider adding it to your portfolio. Next, let's talk about how dividend stocks can help you earn a steady income while growing your wealth. Dividend stocks are a powerful tool for building wealth and generating passive income. These are shares of companies that pay out a portion of their profits to investors on a regular basis, typically quarterly. The beauty of dividend stocks is that you're not just relying on the stock price to grow, you're also earning a consistent income. For example, companies like Coca-Cola and Procter & Gamble have been paying dividends for decades, making them popular choices for investors seeking stability. What's more, many dividend-paying companies increase their payouts over time, which means your income grows as well. Reinvesting these dividends can significantly accelerate your wealth building through the power of compounding. Research a few blue-chip companies or ETFs focused on dividend-paying stocks and consider starting with one that fits your risk tolerance. Next, let's cover some common mistakes beginners make and how to avoid them. Starting your investment journey can be exciting, but it's also easy to make mistakes that can cost you money or confidence. Let's go over some of the biggest pitfalls beginners face and how to avoid them. One common mistake is trying to time the market, buying when prices seem low and selling when they seem high. The truth is, even experts struggle with this. A better approach is to invest consistently, regardless of market conditions, through a strategy called dollar cost averaging. Another mistake is putting all your money into one stock or asset class. This lack of diversification increases your risk. Instead, spread your investments across different sectors and asset types. Lastly, many beginners react emotionally to market fluctuations, selling in a panic when prices drop. Remember, markets recover over time, and patience is key. Choose a simple, diversified investment strategy and stick to it, avoiding emotional decisions. Now, let's talk about the importance of having an emergency fund before diving deeper into investments. Before you start investing, it's critical to have a solid financial foundation that begins with an emergency fund. An emergency fund is a safety net of liquid savings set aside for unexpected expenses, like medical bills, car repairs, or job loss. Without this cushion, you might be forced to sell your investments during a market downturn, potentially locking in losses. The general rule of thumb is to save at least 3 to 6 months worth of living expenses in an easily accessible account. Like a high-yield savings account, this ensures that if an emergency arises, you won't derail your investment strategy or financial goals. Think of your emergency fund as your financial shield. It protects you from the unexpected and gives you the confidence to invest knowing you're prepared for life's uncertainties. Calculate your monthly expenses and set a target for your emergency fund. Begin by automating a small percentage of your income into a savings account. Next, let's explore the mindset that ties all of these strategies together: patience and long-term thinking. The final and perhaps most important mindset for successful investing is patience. Wealth isn't built overnight. It's a gradual process that requires consistency and long-term thinking. Markets fluctuate, and it's natural to feel anxious during downturns. But those who remain patient and stay the course often see the best results. Consider this. If you invest $200 a month in an index fund with an average annual return of 8%, in 20 years, you'll have over $120,000. But this only works if you let time and compound interest do their magic. Selling too soon or trying to chase quick gains can disrupt this process. Patience also means resisting the urge to compare your journey with others. Focus on your goals and trust the strategy you've built. Commit to reviewing your investments only periodically rather than reacting to daily market changes. Stay focused on the bigger picture. Now that you've learned these essential steps, let's reflect on how to put them into action and build your financial future. At this point, you've learned the essential steps to start investing in 2025. But remember, the real key isn't just knowing what to do, it's taking action. Every investor starts somewhere. Maybe you're feeling overwhelmed or unsure, but taking even the smallest step today can lead to big changes over time. Think about what you've learned: the importance of starting now, diversifying your portfolio, and building a safety net. These aren't just tips, they're tools to create the life you want. Success in investing isn't about perfection, it's about consistency and growth. Each small decision you make today compounds into something bigger tomorrow. Whether it's opening your first investment account or committing to learning more about the market, what matters is moving forward. Take a moment. Which of these steps resonates with you the most? What's one action you can take today to begin your journey? Remember, you don't need to be an expert to invest. You just need to start. Next, let's talk about how you can stay connected and continue growing your financial knowledge. If you found these steps helpful, let me know in the comments. What's the first action you'll take to start investing in 2025? Don't forget to like this video and share it with someone who's also looking to begin their investment journey. Your support helps this channel grow and reach more people who want to improve their financial future. And if you haven't already, hit the subscribe button and turn on notifications, so you never miss a video packed with tips and strategies for mastering your money. From beginner guides to advanced insights, this channel is here to help you every step of the way. Your journey to financial success starts with one step. Let's take it together. Investing is about more than just growing your money. It's about building a future you're excited about. Every dollar you invest is a step toward creating freedom, security, and opportunities for yourself and your loved ones. Remember, the best time to start investing was yesterday. The second best time is today. You have everything you need to begin, and the journey ahead is full of possibilities. Thank you for watching and being part of this community. Stay consistent, stay curious, and I'll see you in the next video. Let's make 2025 the year you take control of your financial future.